Good morning. Today in this PPT video, we will try to understand the basic terms in accounting. This is the second chapter in accountancy of class 11th. The first term which we are going to discuss today is entity. Now, entity or business entity refers to the economic unit which is formed or established for earning profits or income by providing the services or by selling goods. Examples of entities can be like a stationery dealer, Jain Book Depot, or Popular Bookstore, or big industries like Reliance Industries, or Tata Steel, Tata Motors, Maruti Suzuki. All are examples of entities. Again, entity means an economic unit. What is it? Is an economic unit formed for earning income, and they provide by providing services or selling goods or manufacturing goods. A small retailer is also a entity, whereas a large industry like Reliance will also be considered as entity. When we are discussing accountancy, wherever entity is used, it can be a sole proprietorship firm or it can be a joint stock company. So the meaning of sole proprietorship, joint stock company, we will be discussing later on. The next term is business transactions. Now, from the term business transactions means any event which can be expressed in terms of money, which are measured in terms of money. In actual life, real life, lot of events are there, but all events are not transactions. A business transaction is an economic activity which takes place between two entities, two businesses or two persons. It can be a purchase of goods, receipt of money by the business, payment to a creditor, or incurring expenses like payment of salary, payment of commission, electricity bill, etc. The business transactions can be cash transactions or credit transactions. When the amount is paid immediately, it will be known as cash transaction, and when the transaction is entered into with the promise of making the payment on a later date, it will be known as credit transaction. Okay, so a business transaction is an economic activity which takes place between two persons or two entities. Business transaction can be a cash transaction or a credit transaction. The transactions can be further classified into internal transactions and external transactions. Internal and external transactions we will discuss later on. Business is selling goods for cash is an example of business transaction. The same effect will be recorded by the customer, like customer is buying goods for cash. Okay, so all these are business transactions. The next term which we are going to discuss is assets. Now, assets is a very important term in accounting. Assets refers to all those properties which a person or a business owns. See from these examples, machinery is there, building is there, vehicles is there, all are examples of assets. Now, what are the common features of this? They all are properties owned by someone, they have some value, and they will give some future economic benefit. Now let's see the definition of this. Assets are the properties owned by business or enterprise. Example is building, land, machinery, vehicles. All of them are the properties and they are owned by someone and they have some value and they will give benefit to the business in future. In other words, assets are economic resources. Economic resources because they will give some benefit, economic benefit in future. And these benefits can be expressed in terms of money. They have some value and assets enable the business to get future economic benefit. And these assets are used in the business to earn or generate revenue, to operate the business. Assets can be further classified into non-current assets and current assets. There are many more classifications, but here in the first chapter, in the basic accounting terms, we are not going into details. Non-current assets are held by the business for a very long period of time. Like machinery, once acquired, it will be used for a long period of time and it helps the business to produce goods. It generates lot of economic benefit for the business. In the same manner, land and building is acquired keeping in mind a very long period of time. So any assets which remains in the business for a very long period of time will be known as non-current assets. It increases the earning capacity of business. Second one, current assets. Current assets are those assets held by the business for a short duration. It will be converted into cash, say within 12 months. So non-current assets, we can say that assets which are not current assets are non-current assets, or non-current assets will be there in a business for a very long period of time and current assets will be converted into finished goods or cash within a short period, say within 12 months. Okay, so assets are further classified into non-current assets and current assets. Non-current assets remain in the business for a long period of time. Okay, examples are machinery, land, building. Then current assets will be converted into cash within say 12 months. Okay, within a short period. The next term which we are going to discuss is liability. Now liability is the amount which is payable by the business to outsiders. Okay, liability can be further classified into like assets, non-current liabilities and current liabilities. So as discussed in assets, non-current assets remain in the business for a long period of time. Non-current liabilities are the liabilities which are payable after 1 year. Okay, liability which is payable after a period of more than a year. Examples are long-term loans. Okay, debentures. Now the debentures is a new term for you. The meaning we will discuss later on. Then current liabilities is the liability which is payable within a year or 12 months. Examples are creditors, outstanding expenses like salary outstanding, electricity bill outstanding. Now the last term which we are going to discuss today is capital. Amount invested by the owner or proprietor in case of sole proprietorship and partner in case of a firm in the enterprise is known as capital. Now capital may be introduced in the form of cash or assets. In the next chapter in accountancy we will be studying a principle known as separate entity concept, and according to that concept business and owner are considered as separate, and the capital is considered as a liability of the business towards its owner. So business, for the business entity, capital is an obligation, therefore it is shown on the liability side of the balance sheet. So capital plus liability is equal to total assets. Now what is capital? Capital is the amount invested by the owner in the enterprise. It can be in the form of, introduced in the form of cash or assets. And for the business entity, capital is an obligation, liability. Okay, and capital plus liability is equal to asset. This is known as accounting equation. So accounting equation is assets is equal to capital plus liability.